In our last two conversations from Davos, Arijit Barman, my colleague and ET's associate editor, spoke to the chief of the world's biggest vaccine maker and two scions from two of India's biggest conglomerates. So, episode 1 of the series, Adar Poonawala, CEO, Serum Institute of India. Episode 2, Parth Jindal, MD, JSW Cement, and Priya Agarwal Hebbar, Chairperson, Hindustan Zinc. In the latest and final part of this short series, he caught up with Nicolai Tangen, the CEO of Norges Bank. Now, Norges Bank is Norway's central bank. But that's not all Tangen runs. He's also in charge of the world's largest sovereign wealth fund. Valued at almost $2 trillion, it is globally the biggest stock investor with investments in more than 9,000 companies across the world. This conversation was like a microcosm of the biggest debates at Davos 2025 itself.
Last year, it's all about Trump.
In this, Tangen spoke about what ESG means for a company which has its genesis and its DNA in Norway's oil and gas reserves. Tangen, who has been everything from a chef to a translator before he took over Norges Bank, also spoke about how climate and finance are intersecting more than ever before, about how the world is entering a period of low returns and why the global markets seem to be impervious to this. He spoke about why he thinks tech companies account for disproportionately large chunks of indexes, and he spoke about India, what he likes about the country and the market, and what worries him. Finally, he also spoke about his own podcast and whether those conversations shape his business decisions. Listen on to excerpts from that very interesting conversation. It's Thursday, the 30th of January. I'm Anirban Chaudhary. This is the Morning Brief. Over to Arijit and Nicolai Tangen.
I was fascinated when I was going through, a bit about the fund and, of course, your life story. I don't know whether, and you walked in and you said it's like spy who came in from the cold. Now, you've had degrees in art, history, and psychology, then economics. You were a chef, a Russian translator. You've been in intelligence before. Then a hedge fund. From then, you're now the custodian of nearly $2 trillion of assets for the Norwegian Sovereign Fund. I don't think anyone in your position has had such a journey in their life. How did this happen?
That's a good question. Incredible. A journey. You never plan a journey. You never plan your life journey.
Mm-hmm.
I think it just happens, right? I've been very lucky in that I have been at good educational places. Mm-hmm. So the universities have studied with good professors, had a lot of luck in terms of timing, and that is about, the hedge fund when you set it up and so on. And I've been very lucky in that I've been able to have a continuous journey of learning.
Yeah.
And learning is the most important thing in my life. And I think learning is the key to happiness.
But it must be very daunting to wake up every morning and say, my gosh, it's $2 trillion and you're the custodian of it.
I'm not the custodian. Basically, it's, it's a fund. The mandate is given by the Ministry of Finance.
Yeah.
We are 700 people who run it together. Mm-hmm. I'm just the CEO.
But, the buck stops with the CEO.
Oh, sure.
So, it's just another day in office every day, or sure. Wow. Okay. In the last few years, we've seen, this whole ESG, the campaign around green is clean. But now we have a US president whose motto is drill, baby, drill. Mm-hmm. Is that good news for a fund like yours, which has intrinsic roots in fossil fuels?
Yeah, it's based on the revenue from the continental shelf. It's a combination of direct ownership stakes by the government, taxes, and dividends that we get from companies. It's been important to invest it in a responsible manner because it's invested for, the very, very long term. I don't have a view on the energy politics of the country, but I do observe that in particular the gas part of the exploration is an important part of the energy security for Europe going forward.
But do you see that, oil once again, prices will rise. We're going to see massive amount of investments by big oil into drilling and exploration. And that in a way is perhaps good because for a fund like yours, I mean, do you see that or do you see?
It's a mathematical fact that if the oil price is high, there is more money coming into the fund. That's right.
Okay. Now, from 1996, when you started putting your kronas to work in the markets, to now in 2024, you are set to own 1.5% of every listed company.
Yeah.
So it won't be wrong to say that you symbolize the internationalization of high finance or finance.
Yeah.
But now we see around the world, walls are coming up. Global trade is getting halted with tariffs. Countries are looking inwards. In your view, is this the end of globalization or internationalization as we know it?
Well, it's a really tough one for sure. Globalization is reversing a bit as we speak. We are seeing some of the global trade organizations are becoming less influential. We are seeing, more trade barriers. We're seeing more export restrictions and so on. And we are seeing the world dividing into the two blocks, right? And all of this is negative when it comes to economic growth and world trade. So everything else being equal, it's a negative. What we're also seeing now is we're seeing a closer link between technology and geopolitics. We're seeing a closer link between climate and finance. And so this is totally interlinked in a different way that we have seen before.
Right. But if we see, or if the commentary is to be believed that energy prices are going to go up because US and around the world, people will be drilling more, then do you think this whole thing of, green or ESG and finance, that linkage will break? Or, it's a trend that can't be reversed any.
No, I would say that the link between climate and finance is stronger than it has been before. I mean, you see the forest fires in LA.
Yeah.
That's having financial implications. We are seeing the impact on harvests across the world. You see cocoa beans, olive oil, chocolate, all these kind of things. You're seeing it in the ability to work during the day in places which are extremely hot. You are seeing climate effects on emigration. You are seeing it on military conflicts. It's just more tightly integrated into the world.
Now, I was listening and reading to some of your earlier interactions, and this I'm talking about 2022 to 23, around those time. And you said we are entering into a long period of very, very low returns.
Yeah.
But we have seen risk assets outperform around the world. Equity markets in US and India have been on a tear. Private equity returns have overall been impressive. Will you still stick to your previous statement of low returns?
Absolutely, more than ever, because we are now higher than we were when we first started to talk about it. I think we are in an environment where we have higher rates for longer, I think. It has implications for return streams from private equity. We are at higher valuation levels in the stock markets. We have more concentration risk than we've ever had before. So markets are more risky than before.
What do you mean by concentration risk? I mean, are you saying bigger companies are getting bigger and that's the concentration risk that worries you?
We are seeing some of the very, very large technology companies becoming a disproportionate part of the index.
And the core of this is AI and chips, which is at the heart of this.
Well, there are several things. We see it everywhere. Winner takes it all. You see it in music, more people listen to Taylor Swift than jazz and classical music combined. Okay. You see it in sports. If you're a good football player, you make a lot more money than everybody else. And you will see it in the stock market. Okay. So that's just one thing. Second thing is you see it in technology more than in other areas because of the platform structure. So you're on Facebook because everybody else is on Facebook, right? So you manage to increase this critical mass like in Uber, Airbnb, and so on. And then lastly, on AI, it's even more extreme because it's so expensive to develop these models.
And it's just a few chip companies like NVIDIA who's getting bigger and bigger and more influential, just like a Meta or a Google.
That's been the case until now.
you talked about low returns and unprecedented risks in the market, but somehow, if you look at the equity market, especially, they seem to have a thick skin like no other, and they are overlooking, or they overlooked wars in Ukraine, the Middle East tensions, martial law in Korea just for a few hours. They're ignoring the growing budget deficits worldwide.
Well, markets are ignoring it until they are not ignoring it.
Mm-hmm. And so far they have been. Okay. What will be that tipping point?
That we don't know. Typically, the tipping point is something you never thought about. What takes us by, it's the unexpected which takes us by surprise. I mean, it's kind of a stupid sentence because it's so obvious, but it's just that's the way it is. It's when you discover something which you have never seen before, which you cannot model. You cannot make an economic model. Now, we have not seen COVID. We couldn't model it.
Yeah.
We didn't know what it was about.
Right.
We didn't know how to model a financial crisis. We haven't seen it before. We couldn't model the meltdown of the nuclear reactors in Japan. We just didn't know what it was. So that's the kind of things which scare us typically.
Has the world been able to model the overwhelming influence of Taiwan in the whole chip making industry?
No, I don't think we have modeled it. I think that's really one of the hotspots in the world. And when you look at the concentration risk in the stock market, a lot of that value chain between those companies is dependent on chip production in Taiwan.
And so therefore they need to or ought to start modeling that or factoring that in.
Well, we try to model it. We have on the website, we have stress tests.
Correct.
And so we have tried to model it.
In Europe, there is no real semblance of big tech anymore. Has Europe lost the big AI and the tech race?
Well, it's a fact that of the 50 largest tech companies in the world, 3 are in Europe, right?
Mm-hmm.
2 of which is SAP and ASM. And the third one is probably, I don't know, is it Spotify probably? For sure, we're behind, okay? I mean, that's clear.
Do you see a bounce back or that maybe it's too late?
I think the Draghi reports believe that it's too late.
Now, nearly a third of your assets are in Europe. Are you then looking to diversify even more and lean on to US, Asia, maybe India a lot more than ever, because Europe, returns from Europe, growth from Europe has been stagnating, stuttering over prolonged periods?
Well, so we are quite indexed there. So when a market increases, we typically automatically have more money there. So we now have more than 50% of the money in the US. As India has increased in importance, the value of our Indian investments have also gone up. So we have roughly 3% of the fund now in India.
3% of 2 trillion.
Yeah. So we have now more money in India, I think, than in China. Isn't that right? We have $13 billion in India.
And this compared to, say, 5-10 years ago? I mean, has it doubled?
Much bigger, much bigger.
Okay.
Not to dissent.
Okay. Now, you've doubled down as a fund on unlisted and private companies in recent years also. Was that a conscious choice? And will this strategy on unlisted or private markets?
So we have wanted to invest in listed private markets, but we have not been allowed to do that by the ministry.
So the unlisted or private company investments would have been routed through that, or would have been a separate pool altogether for?
So we have not got private investments. We have private investments in real estate and in renewables.
Renewables. Okay.
Real estate we've had for a long time. Renewables is a relatively new area for us.
Now, coming to India overall, how does India look from your vantage point?
We are seeing a lot of great companies in India. We are seeing generally a very positive environment. It's been a big IPO market.
Yeah.
So a lot of positive things happening in India.
If somebody has to say, what are the 3 or 4 bright spots about India, what would you say? Most people say thriving democracy, billion-plus population. Is that it, or there's something a lot more?
You've got a lot of very, very clever and entrepreneurial people. You're producing some great companies, great leaderships. So far we've had podcasts with some of the greatest CEOs in the world. They are Indian, and we hope to also interview Indian leaders in India going forward.
Okay. Now, there's been a lot of chatter in the last 2 years, post-COVID actually, about global supply chain disruptions. So China plus one strategy. Do you think that's overrated? Because even Trump is now talking about potential deal with China?
We are seeing generally companies trying to diversify their supply chain, and that makes sense to de-risk supply chains. So that's what we're doing across the world. I think most companies are doing that.
Now, in India, you said you have 30 billion at work and largely public markets and a bit in fixed income. We're seeing, India has been largely led by legacy companies who are predominantly commodity focused, either energy or mines and minerals. Now we have the new, the disruptor, the tech titans who are coming up, all the internet startups who are listing and, great valuations. And so is the portfolio also getting churned in India? Are you guys focusing more on the new age companies and less on the old legacy companies like a Reliance or a Tata's?
So the way we invest in India is through external managers.
Right.
We have 7 Indian managers who operate out of India.
Right.
They do the stock picking for us.
Right.
When we look at the main holdings we do have a bit of each, I would say. HDFC Bank is the biggest we have.
Yeah.
Reliance, number 2. ICICI Banks. Barclays Airtel.
Yeah.
Infosys. So it's a combination of what you said.
Is there something about India that worries you?
Well, we are worried about everywhere all the time, right? So we always have to look at valuations, right? And how overheated equity markets are. And I don't know whether that's now the case in India or not, but that would be the thing we need to watch, right?
But that's more an emerging markets problem than an India.
Well, India has been particularly strong.
In terms of rich valuations.
Well, the stock market has been particularly strong in India.
Yeah.
More than in most other places.
Going back to the fund, earlier from a hedge fund manager to managing a sovereign wealth fund of a country, how did you reset yourself, and because a hedge fund manager is very different. You can take far more risks and.
Yeah, but I took less risk. We used the hedge fund instruments to decrease risk rather than increase risk.
Wow.
So we use it for hedging purposes. So there's more risk in the sovereign wealth fund than it was in the hedge fund I was running in the old days.
Really?
Yeah, because we have less than market risk. Now we have market risk. But it's very much the same way of thinking. You have to have a deliberate and conscious choice of what are the risks you take. And how do you get paid for it? It's how you work with investments in a structured and systematic way. How you focus in on process. How you learn from mistakes. Same thing.
Now, people describe your fund as a super tanker, as a Godzilla, all these adjectives because it's a lot of money. How do you stay nimble yet stay financially disciplined?
I mean, you can't be super nimble with a fund of that size.
But still, you
have to be. You have to invest close to the index weightings, and so that's what we do.
You've also been podcasting. What got you into podcasting in the first place?
So we are the most transparent fund in the world. There are championships for this, and so we 2 years in a row, most transparent fund in the world. For me, part of the transparency was also to give the Norwegian population insights into the companies we invest in. But we have also seen that this has had big interest outside Norway. So when we do episodes like the large tech companies, when we invite, great Indian leaderships, we have lots of listeners in the US, in India, around the world. And so now we had roughly 7 million downloads from these podcasts. It's the most important business podcast in Norway. We think it's one of the leading ones now in the world. And we don't think anybody else really has had somebody of the top CEOs in the world, right? If you look at the Fortune 100 list worldwide, we've had top 3, 5 of the 10, and 30 of the 100. And we have many, many more in the pipeline.
You like a company, you haven't yet put money to work. You get to know more about the company, you get conviction, and then you put the money, or it's always in retrospect?
Well, so we don't use the podcast to actually invest, okay?
Right.
So we have separate portfolio managers who invest. I don't invest with them.
Right, correct.
I just try to investigate and explore some interesting topics. And that's what we do.
Last year has seen, the American campuses have been pretty volatile because of, issues in the Middle East, the Palestinian Israeli crisis. sitting in Oslo, I mean, coming back to India for that matter, is there any particular asset class that seems interesting for the fund and are you going to tweak the strategy?
No, but we think Indian companies are really good. And then the question is just a matter of timing, right? When you put more money in or when you don't. As I said, we rely on the external managers to support us in those endeavors.
But we're also seeing a bit of a slowdown. And, is that something that is that the feedback that you're getting from your managers as well?
No, we leave that to them. I don't have a strong view on the cycle in India.
So we're starting 2025. There's a new president in Washington. How do you think the world will look? If you read the tea leaves, what are the indications that you're getting?
Well, the indications are that people are very uncertain about his kind of social politics and the geopolitical implications, but that US CEOs are quite positive when it comes to their own business in the short term.
That's because US is growing, or?
Yeah, because it's good for the US. But the question is, of course, what will it do to society and what's the effect of those societal effects in the longer term?
Nicolai, thank you so much.
Thank you.
That's it for today. You are listening to this episode on the Morning Brief. We hope you liked these conversations from Davos as much as we did. Keep listening to us every Tuesday, Thursday and Friday, wherever you get your podcasts. This is Anirban Chaudhary signing off. Have a good rest of the week.